Hi everyone, welcome to this SmartCharts European session. Hope you're all well. Alright, so overnight we had the Reserve Bank of Australia interest rate statement, and they kept interest rates on hold as expected at 4.35%. However, there was a shift in their language to what is known as more of a dovish stance. And in the financial markets, you have dovish terminology and hawkish terminology. Hawkish means that central banks are likely to increase interest rates in the future, and dovish means that central banks are likely to decrease interest rates in the future. So historically, the Reserve Bank of Australia, they've kept rates on hold with a more hawkish tone, waiting for inflation to fall. But actually, in the rate statement and press conference overnight, they've said that inflation is starting to get to where they want to be, which is more of a dovish stance, and now the market is pricing in a full interest rate cut in April of next year, but there is a 50% chance of another interest rate cut as early as February. So that will be quite interesting to see. The Aussie is quite overextended. It's been in a long-term downtrend for quite some time really, and so we'll keep an eye out on if there's any further weakness, and we haven't actually come into some really long-term levels on Aussie US dollar, so we'll keep an eye on that currency pair. May still be some further downside there. Now Aussie has been a big theme. Market has been quite choppy because it's been trending for quite some time, and when you're this far into the trend, you tend to get more ranges, and then price breaks down on a news announcement and it just ranges again and it breaks down again. So you can get some of that type of price action where you have less momentum and more sort of range and choppiness. Still tradable though if you're using the right strategies. So this is why we use multiple strategies to cover different types of market flows and market situations. Okay, but the weakness in the commodity currency pairs, but from the Australian dollar, has helped some weakness in the New Zealand dollar, Canadian dollar as well. So that's also helped the overnight trade from yesterday's day 3 live trading day, also a trader certification workshop where we actually participated in a short trade on Canadian Swiss. So we'll get an update on that trade as well. Now, there's no other really high impact news announcement coming out today across Europe and the US, so we're just back to trading market flows. So let's see how the market responds, and we're just back to trading strategies, just levels, flows. So the key here is that because there's no big theme, then we don't want to try to go for the home run and go for the really high reward to risk trade until themes start to develop. And of course, after we've navigated all these high impact news announcements coming out later in the week, where we have 3 central banks forecasted to cut interest rates, so it can be quite volatile. So it's just something to be mindful of. But for now, let's dive into SmartCharts and get an update from a technical analysis perspective. Okay, so if we look at the tools tab, so something you can see weakness in the commodity currency pairs there, New Zealand dollar, Aussie dollar, Canadian dollar, the weakest ones right now. And so that will be interesting to see if we get a bit of a theme developing in the commodity currencies. A bit more weakness in some of those could become quite interesting. Some of them might have already been on your watch list anyway if you're building fast time frame watch lists. Okay, and so again, if you're using your tools tab, your currency strength index, then if you're more of a sort of fast time frame trader, you really want to be pairing up strong and weak currency pairs. You want to be buying the strong currencies, selling the weak currencies, right? Looking for the trend to continue. If you're a medium to high time frame trader, then maybe you're looking for more trend reversals here. Okay, so what is very strong, what is very weak at some point, it's going to come to an end of that trend, maybe some profit taking. You might be keeping an eye on those things. If we get an update on what we've been doing here so far, so yesterday we started off in the morning session, in the European session actually, with the pound US dollar trade on the market breakout strategy, which utilizes moving averages and fractals, and is a versatile one that helps you to identify and trade multiple different types of trends and also range consolidations. So basically, in the European session yesterday, we were here and we said, okay, well look, we're in this moving average zone, the yellow line to the blue line. I like to use moving averages and trade in the zone. Not everyone does, that's fine. But it just gives me a focus to say, well look, buyers turned up here before, maybe they could turn up here again, all right? And last time buyers turned up, they've been driving the market to new highs, so maybe these buyers could drive the market to new highs as well. We also had this angular price, the trend line as well, and we had this double bottom here. So we had a lot of support areas and price patterns. Okay, well, we have confluence of supports here. So that one did okay, went to the target level, but of course sometimes it won't. It will go to the stop loss level and trends change and you have a losing trade, of course. It's part and parcel of the game. Now we have another setup here. However, the difference is this. These buys that turned up before, whilst we were trading it and it got to our target level, they never went on and broke that high point. So that's obviously a bit of a red flag, isn't it? That last time, yeah, we had some buyers turn up, but they didn't really get above that previous high point. So for me, I wouldn't be doing anything here because we don't have that higher high cycle that we look for when we are trading trend continuation. All right. So again, trading the financial markets, following your plan is essential because your plans will help you to identify when to trade, but also when not to trade, when to stay out of the market as well. And yesterday was on a day 3 of your trader certification workshop, your live trading day. And the trade that we participated in was Canadian Swiss on the 180 phase changer strategy, which is a strategy that utilizes moving averages and relative price patterns like ring highs and ring lows. Fantastic strategy to help identify any momentum trends developing in the market. So we had some good momentum here on Canadian Swiss because on top of what SmartCharts is finding, and again, if you're not familiar with how SmartCharts is helping you, just make sure you're reviewing all your e-learning materials inside the Learn tab. Make sure you're attending all your online classes, workshops, boot camps, webinars, the live events tab, and make sure you're attending all your coaching sessions as well. And what you want to do is try to marry up the power of algorithmic technology and a bit of a human insight pattern recognition. Okay, it's the combination of those things which are very powerful. So what we had here was, again, same thing. We're on a moving average. So I like to use moving averages. I like to trade when I'm on the moving average. Okay, we're on this yellow moving average, and we can see that last time sellers turned up here. Last time we came to the moving average, sellers turned up here. If we connect the dots, what does it give us? It gives us this lower low, lower high cycle staircase trend, which we know is a sign of institutional speculators selling this market at a high price, but also willing to keep selling beyond a low price. So again, how the flows are created here from the institutional speculators, your first 2 hours of day 1 of your trader certification workshop and your Learn Forex program. And then we also had this angular price, this trend line here as well, where sellers have turned up before. So again, we had another confluence of resistance areas of potentially sellers turning up, and we also had the higher time frame in agreement. So in this instance, we participated in this trade here as well. That was one trade that went live. We placed a few orders yesterday actually on your day 3 live trading day, but this is one that went live and was helped overnight with the weakness in the commodity currencies to get down to the target level. So what is the focus here for today? Well, with any of the momentum trends or any type of trends we've been trading, we're already quite far into the trends, right? And in this instance, this is now why we're looking at more ranges and more trend reversals, positional things as well, until we get more trend continuation clues developing, which of course we had yesterday. Okay, and this is why the 180 phase changer on dollar yen becomes quite interesting for a positional trade, which if you're a beginner trader, you may not be trading positional setups, but if you're like a master trader, then you may be. So what we have here on your daily chart phase changer strategy on dollar yen is that we're in this moving average zone, right? We're on this yellow line. Now what you'll notice is, okay, this is the first time, okay, we've really fully got into the zone since the moving averages have crossed, right? Since the yellow crossed below the blue line, the fast crossed below the slow moving average. It's the first time we're on the moving average. However, what do you notice? We rejected the moving average here, okay? So you can actually see this small cycle formation where actually price started at this high point, sellers turned up and got it below the yellow line. It rallied back up, but what happened? It stalled at this yellow line where traders sold it then and created a low price here. They kept on selling beyond this low price. So now we have a lower low and a lower high. So in this instance, we are getting this cycle structure developing, even though this is the first time we're on the moving average since they've crossed. But this is the second time on the yellow line. So I'm okay with that, okay? Because, sellers turn up at the yellow line before, maybe they could turn up here again. And so, we have a similar kind of structure to what's developing over here. Price is crossed below the moving average and you're on it. Now, typically as a beginner trader, you will probably wait until you get another lower low cycle and then you trade it here. So now you've got the 2 clear phase 1 cycles since the moving averages have crossed. and then of course, you know, see if there's a trend that does develop. But if you're a master trader, then you know you can get in a little bit earlier to the first lower high cycle, higher low cycle, if you have other clues that you're looking for, and if you're adjusting your risk management to deal with the different kind of probabilities of trading a bit earlier in a move. But we do have that lower low, lower high cycle. We are on that yellow moving average, which by the way, you can see on the way up was acting as a support level, and then suddenly it's acting as a resistance level. Okay, so with a bounce here, bounce here, bounce here, bounce here. Now it's a resistance level potentially. And we have this resistance line here, this trend line as well, okay, acting as a level of resistance. So again, we have a confluence of resistance areas, and most importantly, we have this significant low point. Okay, so I like the fact that price has broken this low point here, and this support level, okay, where we bounced off before, now could potentially act as a resistance level. Okay, so we have a confluence of resistance areas here all around the same place. But it is a positional trade because it's the first time we're on the moving average since they've crossed. Okay, so on top of helping to identify the opportunity, SmartCharts will also help to do the risk management work. Okay, so we click the down icon, it will populate an entry price at the blue dot, stop loss at the red dot, target the green dot, and do all your percentage risk and reward to risk and currency conversion calculations for you. These can all be adjusted according to your own user preferences. And if you are a positional trader, then because it's the first time we're on the moving averages since they've crossed, then of course we're going at lower risk because the positional trade, the market condition hasn't been confirmed below those moving averages. And then we also try to eke out a bit more of a higher reward to risk as well to balance out the probability. So you can see here we have this high point here and this high point here, this low point here. You know, we have an area of support kicking in around there, so we can just try to eke out a little bit more of a higher reward to risk. And the SmartCharts will already recalculate the position size for you automatically. And then we'd like to set an expiry. So for this particular strategy and time frame, I'll set a current bar close expiry and then decline or accept the trade here at the bottom. And basically what that means is if sellers don't turn up, okay, and get to the entry level, by the time this current daily bar closes, this pending trade will expire. Didn't win, didn't lose, didn't cost you anything. But if they did decide to turn up, that will trigger into a live open trade, then either it goes to your target level or your stop loss level. So either you have a winning trade or you have a losing trade. Okay, that's it from me. I'm going to wish you all the best for your trading. Enjoy your live intraday trading webinars today. And in the meantime, it's going to be bye for now.